What has been your greatest win and your greatest loss? It's number-wise and percentage-wise.
I'll talk about the loss first because I think that's actually much easier to get off my chest. I've seen 100% loss straight off the bat. I have seen an investment where I have put my money in and I lost every single dollar. Losing your money or losing a book value in one investment is not the end of the world. And you learn that because of risk management. I have seen a 99.99% loss. It's happened. My highest gain, like where I've actually held the stock to realized value, I want to say is close to 700%.
What's your top favorite cryptos, if you can rank from 1 to 3, and maybe your projections and predictions for the next 5 years to 2030? Hi guys, welcome to another episode. Today we have Mike Crema, a friend and founder of Pacific Cove Holdings. How are you, brother?
I'm doing great, Sadra. How are you? Thank you for having me on this interview. Let's start off on the bat with that one. It's been forever. I haven't seen you in a long time. How are things?
Yeah, things actually been better. So something happened 2 days ago. My YouTube channel, right? You checked it out.
That is like the next thing I was gonna ask you. I was looking at your YouTube channel the other day and it was there and I was like, great, I'm gonna go here tonight and watch some interviews and see what's up before I come here and do this. And it was gone last night. I didn't see it. I was like, where is it? Like, did it crash? And then I went on your Instagram page and I saw that your post was still there and the links weren't working. So I knew something was up.
Yes, something major is up. So I have on my team of rosters, I had 4 employees, right? 2 editors, 1 shorts guy, and an SEO person, which I've been kind of tweaking here and there. Because I haven't found the right SEO team, because most of the viewers they bring is sort of like YouTube labels them as external, which is basically YouTube cannot track it and they could possibly be bots. And I've been just rolling around, just trying new things. And then I found this girl on Upwork and we were like, okay, let's do a 2-week trial. Let's see how you do. I want to see how you perform. And I told her explicitly, only bring me 25% or less external views. She was like, okay, I will. Our 2 weeks is up. I go look at my analytics and it's 90% external views. And I'm like, what? Like, you're not doing your job properly. So I confronted her and she got pissed. She got mad and she had access to the channel because she's doing SEO. And 2 days ago, maybe around like 48 hours ago exactly, I see some posts going up which are pornography on my channel, which was unbelievable. I deleted them right away, didn't think too much of it. Fast forward a couple hours, my editor calls me, he's like, yo, your YouTube channel is down. I checked the email, it's gone. We have to appeal. I take a couple hours on the talk, like we message YouTube themselves on x.com and they respond back. They send us a link which is more personalized for bigger YouTube channels, and I'm in the process right now.
That's wild. That is a wild story. You hit me with a curveball after you said the explicit part right there. That's crazy. That is not okay. I don't even know how to comment on that. For someone to maybe it is, I see you're upset and you're gonna maybe mangle with someone's project, but to post that type of stuff on a social media platform under someone else's account is not okay whatsoever. That should be like maybe against like some like laws when you think about it, perhaps, if you would maybe the deep dive into it. But I'm not a lawyer or any such, so that's shocking. I'm actually shocked to hear that. I'm sorry, but that's crazy. Like, how do you, like, I was going to say you contact Google, you can contact YouTube, but what are your steps? Like, do you do you even think you're going to get your account back? Or
That's a good question. Yeah, so she's from Bangladesh. If she was here, it would be, it's actually against the law, so I could take action, but she's on the other side of the world. There's no point for that. But I've appealed it, and they've gone back to me. They're like, we're actively working on it because if they go and see in the backbones, they can check IP addresses and see, for example, from this email, these posts have been done, and I've had my channel for over 11 years. So
right.
I've had a clean track record. They can see from like Canada or my IP address and my devices. Like I've been clean all along and have been. But then this third party joins and, kind of messes it up from Bangladesh IP and stuff. So if they dig deep, they can figure that out. And I hope they do that. I think there's a 65% chance I'll get my channel back. But I'm prepared for the worst as well. And if it doesn't happen, it's a huge setback. I've had my podcast for 18 months, spent probably over $10,000 on it, many hours. And, it's like the biggest setback of my life for sure. And it's a very tough lesson, but, it doesn't faze me really. It's a lesson, and I'm going to come back stronger, and it is what it is, it's
Well, it's I guess it's easy to say it is what it is, but if I would look at this as, yes, a lesson maybe to learn who you trust, and like with especially personal information and accounts and such. And two, I would maybe view this as, I always like to think of bad things as like a door closing and another door opening. And like, I don't want to make this story personal to me, but like how I can relate this is to like maybe a bad investment. And when you lose, like, for example, you're maybe going to lose some followers in the short term, and in a bad investment, you lose some money. But with a guy like you, I can totally see you coming back from this. In the moment, you think it's a huge setback, but then you work to get back, and then you get past that moment and you look at that and you're like, wow, look at what I did and look at how I overcame and learned from that problem. And you're that type of guy. I know you are.
Yeah, exactly. You can have like a failure just break you apart. I think a character is more developed and much bigger than this. Like, it's a small thing in the grand scheme of things, but yeah, so that's what's going on.
That's wild, man. I'm still kind of like shocked. I'm like, whoa, like that is like crazy. I'm not too much in the social media world, but like, of course, like you have a bigger channel. Like I realize like you had a couple thousand subscribers, if I'm not wrong. And to have a channel like that is got to take some time, and it's got to take effort, and you got to put in a lot of hours to do that. And to be backstabbed like that, and especially in such a way like that, is A, disgusting, and two, it must be humiliating, even though you could have done nothing about it. And three, it must make you feel lost. And I truly feel sorry for that, because that's a feeling that unfortunately 99% of us, I think, have to go through. And it's a good learning lesson, that's for sure.
Thanks, Mike.
That's
Yeah, it is what it is. The good thing is that I have all my content still, because I've been posting it on Spotify, so I can just extract it there. Right. I still have all my shorts, so no content's really lost, which is the good thing. And if worse comes to go worse, I don't get my channel back, I'm gonna have to rebrand the whole thing, maybe change the name, and we'll see what YouTube allows from now. But if worse comes to worse, then I would just post my content from back and keep going, man. There's no stopping, it comes from the attitude that you have towards these kinds of setbacks, and come back stronger. That's the only reason. There's
no law or rule saying on how many times you can rebrand yourself and come back, right? For example, I Pacific Cove Holdings was known as my name for the longest time, Michael Crema Investments. And we went by that for 2.5 years. And I came to fruition that that name was not attracting anyone anymore. And matter of fact, it was actually losing money over time because the people who could have came into the company were diverting because they were like, oh, we're really just investing in a guy. But when you, for example, you change like Pacific Cove Holdings or like Apple or like just a broad-based name, and then you put yourself out there and you actually give a service, just example-wise, you attract. And it doesn't matter if you have to do it once, twice, or 100 times. You can create, rebrand, and go out there again over and over, and sooner or later it'll stick. That's as I say, it will stick to the wall. And there you go. That's business. Business is like a circle of life. It gets born, it goes around the circle of life, and then it dies. But no one knows how big the circle is, right? It can be a small circle or it can be a big circle, and no one knows where the circle goes around. And I'm not saying like this is, and like, please don't take me as this is a metaphor, as like, damn, this is like huge wall, this is the end. This is just the circle, like.
I just wanted to say thank you guys so much for the amount of support you guys are giving this podcast. None of this would be possible without you guys. And if you guys like the video, please make sure to like and subscribe. It really helps me out, and it's completely free for you guys. If you want to support this podcast directly, please check out the Patreon link down below. It will help me directly, and it will help me bring higher levels of guests and improve the studio and really deliver the best content. And also over there, we have some unreleased content, podcast. I've interviewed 2 people at the same time, and there's more content there with people from Toronto that I cannot be in person with. I do over the Zoom, and all the content's there. So please make sure to check it out. And thank you guys for watching. Yeah, this is definitely not the end of the story. I want to do this for life, and I've set myself to do it. And this little hiccup is not going to change anything. I'm going to be much, much more cautious with who I give access to from now on. And these lessons have to be learned. Some people learn it the easy way, and some learn it the hard way, and it came down to me. But that's all that. Let's move on from that. So yeah, Pacific Holdings.
I just spilled water all over myself. What a great way to market myself at the beginning. But yes, Pacific Cove Holdings.
Yes. Can you dive deeper and speak about that?
So, I guess I'll just do a brief introduction. Pacific Cove Holdings started off as Mike Crema Investments, as I just said prior, and I opened the corporation in 2021. And I opened the corporation not because I necessarily wanted to do it. I morally opened to this hedge fund because I knew I could do it. And how I knew I was so confident and how I had this plan is because I started trading at a very young age and got into finances. Loved charts, just loved the numbers. Like, just as a kid, I just thought like arrows and numbers on a chart and a screen were just cool. It attracted me. I don't know why. Like, it's an undescribable thing. But I gotta say, like, near the end of high school is where I really realized the stock market was a great interest in me. And I took a great bold step, and then I did grade 12 during grade 11. I pretty much did not go through my graduation year. I worked my ass off, made a bunch of money, saved up, and just worked for a few years, and did some small investments while researching the market. I hit some big investments. I hit some pretty big losses too, but not to get into that. That's not really where my trading career really even started. I would say my trading career started probably 6 months before the COVID crash. That's where I really got in to financial markets. I started buying oil commodities and then watched them crash to the floor right after. So right when I got into the market seriously, I had my first market crash, which was detrimental. Like, I thought this was not for me. I was like, what am I doing? First $5,000 I saved up here to do serious trading. It's like turned into like less than two within like a couple months. Like, what is going on? And through just research and studying, you learn there's cycles, and there's ups and downs, and there's highs and lows, and there's a difference between an up and a down and a high and a low, and then there's trends, and there's all of these different things. And it kind of turned into a language for me that I wanted to learn more. And through learning the financial ways of the market and also losing a whole bunch of money, which is could have been really easily avoided when you look back at it now through demo accounts, I strived and I just kept going at it. And the losses eventually started turning into breaking even, and then breaking even started to turning into winning on a monthly basis. After the market crash, obviously stocks start going up. That's when things started getting really interesting in my investing career for the first time. I really started seeing some really significant gains. I had some friends investing with me on the side. We were researching stocks together, just doing like small stuff here and there. And I was come to my friend group at the time saying like, hey, like, you're really good at this. Like, you can make a business out of this. And I always thought to myself, like, like a hedge fund / financial service company would be really cool. But I had no idea how to market that or provide a service that is so niche in a way that I can perform against banks and other like smaller credit services. So to the drawing board and I was thinking really hard during the trading on my own. And it kind of came to me that I was really, I don't know if I want to say lucky or like half decent at picking I wouldn't say very small, but lower market cap stocks and really beaten down sectors and grabbing that last flick in the company, like that one last little like blip up in that sector before the sector fell apart or whatever came next. And that's kind of like how my first win came off, or like my first series of wins came off, is investing in the oil market. Is as more oil crashed in 2020, I watched the market go down, and then I continued to buy as oil went from negative $40 a barrel. I think it was negative 30 or negative 40, somewhere in there, and climbed all the way to $150 plus 2 years later. I don't know the percentages off the top of my head, but from negative 40 to plus 150 is on a percentage yield out of this world. So I tried to find something that I can invest, like beside that. What can I capture that I can invest with oil? And that was oil stocks. So I'm already going off a little bit too long here, but I bought oil stocks and they went up. And then my friends came to me saying, like, you got to create this as a business. And that's where Pacific Cove Holdings, aka Michael Crema Investments, at the time came into play. I did my research. I just filled out the federal forms that you can do online. Crazy enough, you don't need any business license. If you have a social security number here in Canada and a Canadian resident, you can go online and file for a corporation or anytime you want. And it's a $200 fee. And that's exactly what I did. I paid the $200. I got myself a corporation, and it was like, what do I do next? And obviously, like, not obviously, but what I had to do next was get money. And getting money, I would say, is the The craziest part of this whole story was probably the easiest part. Raising money, I want to say, was a very blissful, because I had a lot of people that I knew at the time that were very supportive. And two, I think I just so happened to be at the perfect timing in the century to open a company like this, because I opened and filed for the corporation in the spring of 2021 in April or May. And that's when the market was just starting to pick up. Like, it's just coming off of its lows. So I was able to raise about $25,000 and buy a whole set of oil stocks right at before the market bull run of 2021. So I had a very great return. I was annually, after fees, giving my investors, I think, 31% annual return, which is insanely high. And it still has been like that. Last year was a bit lower. It was not as high as 30, but from 2021 and 2022, our averages were 31, 32%. And that right there was able to build a base that we have today and was able to spread out, which no one really sees because I don't market it or have a website or anything. But we have a portfolio of multiple stocks now based off of just a couple of oil stocks and a seed investment from 5 investors a few years ago. So that's the long, tedious story. I tried to not ramble so much of Pacific Cove Holdings. It happened because some friends convinced me that I can do something, and I thought I had the obligation to do it because I did not want to regret when I was older one day, being old, saying, you could have done this. You had the idea, but you didn't pursue it. So I'd rather fail than not pursue it. And that's why I created the company. But of course, I wouldn't create this company to do half slack and fail either. So I'm here to try my best and pursue it at full extent, right?
So a natural question that comes to me, I mean, this is fascinating.
I'm sorry. I went off like crazy right there, but yeah.
No, it's all good. It's just the fact that it seems you're so niche in the oil market, which is like, why oil?
So I was really niche into oil for a long time. I think why I really liked oil so much is because of my childhood. I was just always around engines, like ski boat, dirt bikes, snowmobiles. I was always around the smell of petrol, engine oil, just like outdoorsy fun stuff. And there came across a line where when I was thinking about my investments, and I just thought what is something that people use every day and you cannot get rid of, no matter what people say, the haters or the lovers, you find an in between middle and just find a product that's so stable and it can't go. And that's where I came. I was like, oil, crude oil, cannot disappear. Electronics, it makes electronics, it fuels your car. As much as we're phasing it out over time, we're losing less and less, it's going to stay. So I was like, okay, so I think I have my market that I want to trade. Now, how am I going to trade it? And that's where I took a lot of losses, to be honest, because I had no idea how the oil market and the oil companies were structured. I didn't know there was pretty much 3 different oil companies you can invest in. You can invest in upstream, downstream, or explorers and producers, which is that's my gravy train right there. There's the E&P is what I like to call them. But what was you going to say? Sorry.
Yeah. So I just wanted to linger before you move on these 3 different kind of variations of the companies. Can you maybe dive deeper for people that don't know?
To give it a little nutshell, I do not want to mislead your investors here because it's been a while, but on the top of my head right now, the explorer and the producers are the companies that go out and suck the oil out of the ground. Whether they hire, some companies, they like to hire a third party company, like a drilling company. They come and drill the hole in the ground, and then they come after and just suck the oil out and then put the oil to market. You have companies that are explorers and producers, but they're also integrated, so they do the drilling and the oil extraction. To get into this, like upstream, there's upstream explorers and producers and downstream. I'm pretty sure I have that wrong, to be honest, so I want all of you viewers to like double check this information, but it goes in somewhere along in these lines, and you gotta figure out what market the oil market is in. So just to finish off your question, there's the explorers and the producers that extract the oil. There's the drillers who drill it. And then there's the midstream guys who transport it. So those are like your pipeline companies. And then there's downstream, which is like your gas stations. But there's like, to give you like a prime example of a true downstream company, it would be like a private gas station, a company that just like that sells the product at the downstream, like the very down of the last bit of the production stage of oil. Mm-hmm. And then if you think of it, you work your way up, the midstream, the pipelines, the transportation of the product to that final destination, to the downstream. And then you go up from midstream. Where does it come from midstream? The explorers and the producers, the extractors, right? So it's really hard to describe because you have the very big corporations like the Chevrons and the Exxon Mobils. They're integrated. We call those integrated because they do it all. They have the gas stations. You see the Exxon Mobil gas station, but they're also out there drilling and exploring for new oil. They got the drill rigs out there drilling into the ground looking for new oil.
They don't leave any profit on the table.
They exactly. You're talking about big oil here. You're talking about big corporation. This is like this. Yeah, it's money, money, money. They tick up every cent. If especially those big ones, those multi-billion-dollar integrated companies, if they see any piece of the market that they think they can capture and make a profit out of, they are gonna take that instantly.
What do you think about? I know Aramco is the most valuable company to date, and they do oil in Saudi Arabia.
Yes.
What do you think about them? Was it different from here, or is it just they can tap into so much more natural resources?
Well, like, to be fair, I don't study that market. I don't study Saudi Aramco, but they have just so much oil in the ground. That's their biggest asset. Like, they have a gold mine sitting under their feet, and they don't have to pay any money. They don't have to do anything for the oil, they don't have to pay any fees for what's sitting under their feet. They can pump what they need and then sell it off. And that's what they're doing, is they have so much of it, and the market is valuing that. That's kind of like a problem that we have. I wouldn't say over here, but that's because we are like the third largest resource in the world. We have more than enough oil ourselves, but that's the reason why they can sell it so cheap and so sporadic, is because they have such a big production and they can pull so much out of the ground at once, and they have so much in the ground where they don't care if they hit the market. They don't care if they put the oil down, for example, because they just know that they're making a profit anyways. Or honestly, like what happened a few years ago when Trump was first in office, and he had energy war pretty much with Russia and the Saudis and America. They flooded the market with oil. It was an oil war. It was like who can grab the market share. These three powers wanted to sell the oil to the world, right? So to compete, they just kept selling it cheaper, 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 cheaper. And then they sold it so cheaper, they didn't make money anymore. They just kept selling just to gain market share. And that's kind of like what happened and kind of what fueled the COVID crash too. Like that was a really weird time for financial markets. It was a true black swan event. No one what was going on. They were out of control. But one of the factors to the many factors of the oil crash was Trump's total energy war with Russia and the Saudis, mixed with, of course, demand and all that stuff. It just sent prices to the floor. And it's a perfect representation of companies or even nations going head to head, going all out, willing to bankrupt themselves just for that little bit of market share.
That's insane.
It's crazy. It's crazy. Like, obviously, like, there's stuff that I don't even understand, but this is my personal view of it.
Let's not get too dark about the past is the past, and it's good actually for us to speak about it and have the audience kind of understand what's going on behind the curtains, because I also believe there is a lot of decisions happening in closed rooms that no one knows and probably will never know, and is changing our lives every single day. And it's unfortunate because these governments should be working for us, serving to us in a way, but it seems to be the other way. But so you were very niched into oil, but then now it seems that you have deviated from that to other sort of sectors. What made you have that change?
Well, I was obsessed with oil because I just, like I said before, I had a little bit of a personal attachment, like dirt bikes and stuff like that. I just liked it. I wasn't financially attached to it though. Like going to the other port, I was looking for that last flick. And when I saw oil, like before it crashed, I thought oil had its last flick. But then when it crashed down, I really thought, I was like, wow, okay, like oil has a massive gain from here if we're on the floor and all these oil stocks on the floor. So this, in my mind, I was like, this is it. Like, this is the last, this is a crash, and then we go back up and you can capture this profit here in the oil market. And then that's it. Then the oil, it will kind of stabilize, and then we'll get into 2025, which we are here now, then 2030, and oil will stabilize. And that's kind of like what it has done. It's done some volatile moves on some weekly basis, but it's more or less stayed in that 60-50 range, sometimes going to 70-80. But it hasn't done like its parabolic push to 140, 150 since 2021. So I really do believe I was really blessed, and I caught that last spike in oil. I caught that last great cycle, and now it's time for me to diversify or to get into other things. And that doesn't mean oil is a bad investment. I still hold oil type related investments. I'm just not leveraged all into that market anymore. I've pretty much diversified my portfolio in a little bit of oil and gas, electronics nowadays, data computing centers is where I'm at. The market likes to call those as Bitcoin miners right now, but I like to refer those companies a little bit different. But we're in a mixed bag of things. But what I like to say is, when you get offered something or you want to have something great, you need to concentrate into something. And that's, I think, what was Pacific Cove Holdings' greatest break Or like luck was we went all in at the beginning. We believed, me and my investors. I told them right there and then, I was like, your money's going to go straight into the sector and we're going to lever up and we're going to hold. And we did it and it won and the bet won. Right now, for the last year and a half, we have other bets that haven't done so good, but that's the way of the game.
That's the way of the game, indeed.
That's the way of the game.
It seems you're quite diamond-handed, which I think you have to be.
I like the term diamond hands. I think it's funny, but like I don't change my portfolio if the fundamentals haven't changed. Like the stock prices, like yesterday's prices and today's price is a very true statement. Tomorrow's price is not today's price. Very true statement. Market can do whatever it wants. It doesn't change the fact that a balance sheet was X at this date, or a company's revenue was at this date, or they're selling shares or buying back shares. These hundreds of millions of different variables that go into these businesses that over time will create value. The stock market is a very inefficient way of transferring money. It's human versus human. Well, nowadays it's human versus computers a lot of the times, but it's one party versus another party selling or buying an asset. And one party thinks the asset is going to go up, and the other party thinks the asset's going to either go down, go flat, or they're selling because of a cause. Different cause. Like, just to put into perspective right here, this is a Peter Lynch saying. You can sell a stock for 100 different reasons. You can sell it because you need to buy a house, buy a car, family, medical reasons. But you only buy a stock for one reason, and that's because you think the stock's going to go up. You only because you think the investment's going to go up. And that's literally how everyone thinks in the market. And if you get, like, what's the population now? Like, we have 8 billion people on this planet. Let's say like a billion people participate in the financial markets. These are totally made up numbers, by the way. This is not legitimate any means. A billion people trading more like X amount of money is a lot of transactions. It's a lot of money flow, and it's a lot of different thought processes. And those are the three things that make a stock market. It's people, it's money, and it's different opinions. Why are you buying? Why are you selling? Why are you buying at this price? Why are you selling at this price? What made you think a company was worth this today compared to yesterday or tomorrow, right? Like, these are all things that people think about, and just it drives their mental choices every day. And the winners in the stock market, I believe, are the ones who can legitimately set aside all emotion and just look at everything at a third person view and just think, what is this company going to be worth in 5 years from now? Or if you're a day trader, what is the probability of this chart doing the pattern that it should usually do? Or like, for example, when you're day trading, like, okay, like, what are the chances if I put my order here and I put a stop loss here, like, what are the chances of price actually coming down to the stop loss and me thinking, no, this is just temporary, I should hold or double down? Like, these are all thought processes I used to go through and people go through every day. And this is why the market never changes, because you always have new people, old people entering, and they all have the same thing. And this is where I think I'm really fortunate enough is to break this curse, is to break these thought processes, is to sit down and just be very calm, non-emotional. Look at, like, you wake up every morning, you look at the market, but it doesn't mean you have to participate in it. I might trade, I think I do like maybe 4 or 5 trades a month, if not even, on a day trading perspective. When it comes to investing in stocks, like buying and holding for a long time, there's a total different process in that. But when it comes to, for example, if you're day trading and you're trying to make just some pocket cash and revenue, you are not supposed to be day trading every day. That is like how people lose money. That is one thing I can like tell people in the stock market, is that if you're trying to trade every day, you are probably a loser. Like, unless if you're like the greatest trader ever, then tell me to shut up. But like, you're probably losing, and that's the reality of it. And it's kind of like gambling. Like, the longer you gamble, the higher like you're gonna lose, the higher chance of losing. The smart, I don't think there's more such thing as a smart gambling, but in like if you're going to be intelligent about it, you would know like, okay, like I'm going to go play 5 rounds of blackjack and do $1,000 each. Or like, if I lose like this 1,000, I'm going to go to 2,000, you know? And then if I get the 5 hands, I lose them all, I'm going to stop. I'm not going to keep going. Or that's like a bad example, but the longer you participate in the market, the higher the chances of you screwing up. And that's the demise of traders. The demise of investors is they stay so long where that mistake happens and they can't recover from it. And we can go into 100 different topics of risk management and all of that, but like that's my personal experience of like watching my friends and other people like come and go in the market. Is like they go through problems like that. There's so many much more like problems we can talk about, but those are like some key ones I can think about.
Right now it's 10th of January.
It is the 9th today.
9th, mashallah. 9th of January 2025. I'm just thinking, like, just set the date for when we were talking, because I don't know what might gonna happen to my YouTube channel and when this video gonna go up, but it will go one day. And what percentage of your portfolio is in which sectors? Can you speak on that?
I'll definitely tell you I'm not gonna get into share count or anything like that, but I can tell you right now that higher than 85% of my portfolio is in crypto-based assets right now. Not cryptocurrency directly. Like we hold some Bitcoin. We own a full Bitcoin, Pacific Cove Holdings, and I own a couple Bitcoin myself that I've bought up over the last year or two. But Pacific Cove Holdings is morely invested in the Bitcoin mining sector, or what I like to call the data server center, the upcoming data server community that no one really recognizes yet, or like the market is just starting to recognize, but they don't like it yet. Do not ramble off to here, but like our real big bullish thesis right now with this huge the cloud computing, cloud storage, video games, all of this AI stuff, like the internet is just it's just growing. It's like the fastest growing thing on earth, and something needs to run it. Something needs to store this information. The internet does not run off the literal cloud. It runs off of something. You need servers. And who are going to run these servers? It's going to be companies. Microsoft, Apple, all these big conglomerate companies are not going to own them all. There's going to be definitely third-party companies out there that are going to start buying up power. They're going to start buying up infrastructure. And then they're going to start finding ways to use this power and infrastructure and economic ways to make money. And I think that's just what these Bitcoin miners are. They're early stage companies that are using Bitcoin to their advantage to fund themselves and to grow into huge database center companies, like huge. When I talk about huge, I'm talking about like multi-billion dollar market caps for these companies. And a lot of these companies are trading, some of them in tens of millions, like hundreds of millions type thing, or like just a couple billion market cap. And I'm thinking the sector can be worth trillions, if not tens of trillions of dollars someday. So that's where Pacific Cove Holdings is really right now, is like in data centers. And then the other like 10-15% is in like oil, and then like industrial mining, like lithium and stuff like that for electric cars. But we're not too much of a big better when it comes to like metals and like stuff that we don't really like I don't understand too much. Like I don't know the full basis of like what goes into a lithium mining company, but like because I'm not at the mine, I'm like every mine's different, like every operation's different, people are different, management's different. Bitcoin mining companies, for example, they are some of the most coherent see-through companies you can deal with, because they post their numbers on a monthly basis. You know exactly kind of what their revenue is going to be every 3 months, because they give you a monthly snapshot of their operations. They're most of the CEOs and the management circulars of these companies are open to interviews like this on YouTube. They go and do different podcasts, so you can really get an in-depth version of who these people are. And that's a reason why I'm invested in a company called Bitfarms, actually. Like, just to break the ice, like, so heavy, is because there's a CEO and a guy called Ben Gagnon, which I've, been following for a while. And I've been following this company before he was even CEO. And I've been watching closer steps, like, they're Bitcoin mining, but they're going to diversify. The Bitcoin mining is not like it's not going to be here in 200 years from now. You're going to have to find a different business model. And that's what these companies are doing, is just using Bitcoin as that stepping stone to the next stage. And then this guy, who I don't know him personally, I'm just going off of what I know and I've researched off of him. He seems like a very smart, young, coherent guy that's been in the Bitcoin space for like ever since it started. And that's the type of person who I want to run a company. I don't want a 60-year-old guy or some dude who's just been running business forever as his life, and now he's in a small venture company and he's like, oh, I gotta feed my family. Like, how can I make my salary work out for this year, right? I'm looking for companies that have actual growth. I'm looking for people who want to make that change. And that's where I came down to, out of all the companies like Marathon, Bit Digital, there's so many Bitcoin mining data companies. I came down, or Hut 8, I came down to Bitfarms because they have this new young CEO. They have an excellent management team around the CEO. I'm just overall really feeling good about it. I can get into the financials of it, which is honestly not the greatest thing. I'll be honest. The company does have a little bit of eerie financials, some people like to say, but I like to say the company's strategically positioned. If the market goes the right way, the market sentiment goes the right way, their leverage on this is huge. It will outperform Bitcoin, I think 3-1. Like, the beta on it right now is, I think, close to 3. So like I've always said, like, when it really starts picking up, it should outperform Bitcoin 3-1. Sorry to ramble on you, but that's like one of my main investments right now is Bitfarms.
A little bit of insider information.
I wouldn't say it insider, but that's just like that's a very, very brief nutshell on like my main holding and how I think about it. Like, I mean, I can talk about hours on what made me pull the trigger and companies that I owned before, like when I got into the sector. Bitfarms was not my first investment, or nor my only investment into that sector. I own a stock called TeraWolf, or at least trade it. I haven't touched it in a month or so, but I've been trading it. Hut 8 is another one that I've been in and out of. But Bitfarms is the one company that I can look at and just be like, I don't just feel good. I am like for certain that this young guy has passion, just like me and my company, Pacific Cove Holdings, and he wants to drive value and create something that is that's, I want to say world changing or life changing, but is definitely impacting in the market. And if you impact something, you're going to create value. And that's why I'm there for that company. Like, what were you going to say? Sorry. I keep saying that.
Bitfarms. That's great. This question was just off the top of my head. I wanted to ask you before I forget it. What has been your greatest win and your greatest loss? Number-wise, and
I knew that question was coming.
Percentage-wise. Number-wise and percentage-wise.
So I'll talk about the loss first, because I think that's actually much easier to get off of my chest. I've seen 100% loss. Straight off the bat. I have seen an investment where I have put my money in and I lost every single dollar. And I still hold those investments today. Not because that I want to, but it's just because I can use them for tax selling purposes, or there's just genuinely no point. And what I can tell you from right now is losing your money or losing a book value in one investment is not the end of the world. Not one bit. And you learn that because of risk management. If you're trying to figure out like how much money I've actually, like, on a face value, I don't want to go into that. It's a very large number. But yes, I have seen a 99.99% loss. It's happened. My highest gain, like where I've actually held a stock to realized value, I want to say is close to 700%. But that's not like my whole portfolio. That's just one trade, right? That's like watching that one stock ticker quantity and then percentage gain, right? Not my whole portfolio. But I've seen trades do that. And all stock trades too. That ain't options. That's not options trading. Yeah, that's it.
It's a good life.
Hey, I mean, like, it's the consistency that matters. Like I say, everyone can lose money in the stock market. Like everyone does. And everyone can go in there and hit a banger. Like you can just be like, I like the stock, buy it, and then 2 months later it tripled in price for whatever reason. You're like, yeah, I won. Price went up. But it's about making it consistent. And that's where people don't win, is making it consistent. And I find that hard for myself too. I think probably a lot of people out there find this hard, is making those gains consistent. And then when things are going south, you don't, for example, put more money in, or like chase your losses. Like you're at the casino. Like, chasing your losses is a huge thing in the stock market when it comes to trading. People think like, oh man, I gotta make this up. Like here, it's like, no, you don't. Like, it's like, no, you don't when it comes to trading. A win is a win and a loss is a loss. And you gotta walk away from both equally at the same emotion. You can't, if you were to make a trade and make $1 million, I would be pretty excited myself. And, if you made a trade and then you lose $100,000 off the bat, I'd be pretty upset. But you gotta be able to get up from that desk, that trading machine, and go outside and smell the roses with the same face. You have to. And when you can do that, that's when you have mastered your emotions the psychological of trading. And I am no master of this whatsoever. I still to this day catch myself a lot of the time very upset or very euphoric when something goes right, and it's really, really hard not to. But that's how you got to be. It's true, because when my best trading days, I've found out, are the days where when I close that computer and either it's a win or a loss, well, like good days, so a win, I just go out and about and there's no emotional change. You know, when I find myself getting really happy and excited after a couple investments, I'm no joke, I find myself losing right after, like really soon after I get into like a couple bad trades or whatever. And that's where I just think like, maybe sometimes it's life, maybe sometimes that's the luck, but I think you controlling your emotion is what's going to make you be able to get to that next checkpoint. It's being able to get to that next trade. A lot of people, they get to that trade and then they can't do the next trade because they messed up. There's no more funds, or they're too scared. There's 100 million different reasons why, but you got to be able to get to that next trade no matter if you won or lost. And that's, we can get into risk management, can get into 100 different million things with that.
That's awesome. I
Yeah.
think this is a big lesson that everyone needs to hear that's trading, really.
Well, if I need to listen to myself, honestly, sometimes hear what I'm saying, I could go home and tell myself, you know what you said, like, I think you need to do that yourself more.
What do you think about shorting a stock, which is, for people that don't know, for shorting, it's basically the other way. You borrow the stock and you sell it thinking that it will go down, and then you buy it at a lower price and you keep the profits. But then in that sense, your gain can be double, 100%, but your loss can be infinite, theoretically.
On a theory, people like to say that, right? Like you just said, you borrow the stock, you sell it to market, and of course you get the collateral, and then you hope that the asset price is going to drop so you can cover the collateral and capture that price difference. I'm no stranger to shorting. A lot of my day trading is based on that. You might actually come to, if you ever do it or get into the market, that short selling is actually a very popular thing when it comes to day trading. It's actually, personally for me, I find more of my shorts winners than longs on a percentage basis. It's true. But my percentage when it comes to winning and how much you gain is much greater on the longs than when it is on the shorts. Because the shorts, I just capture that little price movement, Meanwhile, when I buy a stock, I'm usually looking for a bit of more of a growth, more of a gain. So like, I'm just like, when it comes to shorting, I'm like taking little bites. And then when it comes to buying, it's taking bigger steps. And I'm not saying that's a good strategy. That's just kind of like how I find my investments to be and how I structure them. I don't know if I do that, if that's so happen to be just because the way I like to sort my money or what it is. But short selling is something that people need to really understand. They need to understand how the market works. They need to understand borrows. They need to understand liquidity. They got to also understand news events. They got to know when they're shorting. Like, you can't just go into a stock and be like, oh, I'm going to short the stock at X date because I think it's going to go down, but earnings is next week. But so you're not thinking of like, oh, there's an earnings report in 2 weeks. The market can out of a sudden start getting your fork for the earnings. And then the assets is going to rise and then you're going to short at this price. So there's like 100 million different things when it comes to shorting, if you're looking at shorting on an investment perspective. If you're buying, like shorting or buying goes both ways when it comes to day trading. You're looking for price and price only. You don't like care about the company or nor care about this ticker. You just care about the technicals and what it's going to do within your time frame. When it comes to like shorting, like because you think the company is actually trash and like you're going to hold that short like an investment, you got to like really be for certain. Like it's like you got to be more for certain than buying the stock, because when you buy a stock, you lose what you put in. But like if you go to short, let's say a medical stock that's like $1, right? And then they have a breakthrough cancer drug and the market cap is only 10 million, but the drug is perhaps worth 50 billion. The stock is going to multiply by like 50,000%. And now the $1,000 you shorted just turned into a $50,000 like hole, right? So now you owe the bank $49,000 within a day. That's a total just really exaggerated example, but that's the type of stuff that can happen in shorting. If you decide to go shorting these super volatile, high priced stocks which short sellers attack, right? That's what they like to do. Short sellers aren't going to go attack a low priced value stock. Maybe they are because they hate the company. I don't know why, but like that's usually they know what they're doing. Like people aren't fond of shorting, but what I can say is that the short sellers, when they get it right, they got it right. You will not win. If they got it right, you will not win.
Damn.
Kind of the same thing with the bulls though, right? Like you can be in the lowest of the low price range and then like you're swimming against the tide, as we call it. And when the tide changes, and if you know the tide's going to change, you win. Like you win. And that's all about, that's a Warren Buffett quote when I think about is you really get to see who's been swimming with their shorts untied when the tide goes out fully, right? See their pants on their ground type saying. I think somewhere on those lines.
That's funny.
But that's kind of like how it is in the stock market. It really is. When the tide goes out, you see who's been swimming naked.
What about arbitrage betting? Have you dabbled in that at all?
So like you're saying like buying and selling right away type thing?
Or no, sort of like there's different exchanges, so then you buy this commodity or this, for example, a stock that's mispriced in different exchanges, and you buy this at like 140, but then you sell it at 145 in a different exchange, so it's like,
well, you can't buy like, for example, the stock market's not like that. You can't buy like Apple stock on like a Canadian hedger exchange, like because like you can buy Apple's not listed on the Canadian exchange, but you can buy like technical Apple like paper stock on the Canadian. This is a prime example. You can buy Apple stock on the NASDAQ, right? Everyone knows that. In the Canadian exchange, there's a thing called Apple bracket something, and it's like $30 a share. But it has the same market cap as Apple. It's just a Canadian hedge. And that's like the closest I can think to like an arbitrage trade, but it's really not arbitrage because you can't buy or sell the stock. You can't buy this like the 30 share stock and then go over to the American market and sell it, right? There's no arbitrage there.
Okay.
So you can't really do that. Like, I mean, like arbitrage, like for example, if I were to go buy a barrel of oil from Suncor over the bridge and then go drive over to Cenovus right away and then sell the barrel for $5 more than I bought it for, that would be arbitrage in a technical like perspective. Yeah. Right away. Right. But I don't fiddle with any of that stuff. I'm like
old school.
I'm fond. I'm just looking at charts, trying to capture a day trade once or twice a week, and then really just trying to build onto my long-term portfolio. Building my long-term portfolio is number one rule. Day trading, like if we were to stop the revenue of day trading, like, you know, it'd be a bit of a hit, but like it wouldn't stop me from growing my investment portfolio because I work a job outside of this company that I'm able to build on. And then with new investment funds that I get from other investors and plus dividends that pay from a couple of the companies that we own, we just reinvest. We have the lowest cost structure, I think, of any financial credit service company in the world. And I'm proud to say that because Pacific Cove Holdings pays rent, a phone bill, an internet bill, and a monthly bank fee, and that's it. And I think our annual expenses, because I don't take a salary from this company. I day trade on my own, and then my other job, you know, so I don't need to take money from the company yet. I'm just able to reinvest and not make any expenses. Our expenses are under $3,000 a year. Under $3,000 a year. So we can put all of our money and then our debts, like if we were to loan money, into our investments. We have a very unique business model because we don't take loans and then go buy a truck, like a depreciating asset, but it's going out and making money, but it's a depreciative asset. We're taking loans and then buying appreciative assets. We're buying stocks. Of course, the stock price can go down over in the short term, but in the long term, we truthfully think we're buying an appreciative asset, which is going to obviously strongly benefit. Prime example is MicroStrategy buying Bitcoin right now. They don't care whether they've been buying it at 50,000, 100,000, or 105,000. They just keep buying and taking loans out because they know in the long term that asset will go up. They're buying that appreciative asset. They know they don't have to depreciate that money. Like that is just sitting in an account waiting. You know, like I don't have to go out and depreciate my stocks every year. Like I know you could say, well, the stock market does that every day because it goes up and down. But like we just sit and hold. It's a super easy accounting game. You buy and you hold and you just wait. And then if you sell, you just do the tax. You take the percentages, you give some to your investor, you take your cut for the Pacific Cove Holdings, and then right now we just put it back together and we put it into the next investment. That's really what we've been doing, compounding.
When you're buying a stock, either for shorting or longing, what are the top key things you look for? You mentioned, for example, the CEO has to be, it's transparent. You look at like the weekly reports from the company. Is there anything else you look into that kind of makes you pull the trigger?
Well, there's 100. There's many reasons. There's like making me pull the trigger. Like when I actually go and buy the stock, I've already like confirmed, like, okay, I want to own the stock. I like it because of its fundamentals. And then I kind of like go into the charts and I'm like, okay, where is like a good price on a technical perspective? That's kind of like how I will use my like the day trading side with the investment side is like where would be a optimal entry point, even though I'm not trying to snipe the low and just like gain 10 cents and then sell it. There's no real there's no guideline. Like there's no set rule of being like, oh, now I know it's the low. The stock can just, there's no floor and there's no roof on any stock is what I'm trying to say. So like when I like a stock, for example, and I want to own the stock, I want to own the company, I like the CEO, I just more or less just go in there and buy it. I just buy the stock. I don't care if the stock's up 5%, down 5% that day. I'll just go and buy it. Unless if I look at the chart, for example, and it's up like 500% in the past month, of course I'm gonna be like, whoa, I'm gonna stay back from that. But I'm not really looking for those day-to-day fluctuations. If I'm looking for day-to-day fluctuations, I'm day trading, and then I'm not looking at the company name. I'm not looking at what they do. I'm looking at volume, and I'm looking at charts, and I'm looking at buyers and sellers in the market. You got to be very distinct on what you're doing. Can't mix them. You cannot mix investing and day trading. It's like mixing oil and water. What they don't mix. They literally do not mix.
Right. Yeah. You said fundamentals. I feel like you've brought this up a couple times. What are these fundamentals that you're talking about?
Fundamentals come down like, that's a good question. The fundamentals really come down like something that is like never, you can't say for certain in the stock market, nothing's for certain, but like it's a book case, as I like to call it. For example, you go into a company's financial records and you look at a balance sheet and you do the accounting, and you come out that the book value of that company, let's say, is like $2 a share, 500 million market cap. The stock is trading right now at $2.50, which is X amount percentage up. So let's say it's 500 million market cap, let's say right now. Now it's at like 650, right? But the book value and the market cap, let's say we were to sell the liabilities and then pay off all of our debts and then give the rest of the money back to our shareholders, it's only 500 million worth of assets. But the market is pricing the company, if you were want to buy all the shares and own the company, at 650 million. So there's $150 million fundamental difference in the price of the stock. Is the stock market going to realize that difference? Is it going to come down right away and because it realizes that? Yes and no. Well, no or yes. It's because it's a whole bunch of people there, and there's a whole bunch of different other reasons, right? There's revenues, there's different assets, there's upcoming projections that make a stock price sit where it is, right? So that's why you got to take fundamentals with like quite a bit of a pinch of salt. Like you gotta I look at fundamentals to see like a nutshell of where this company's sitting. I'm like, how is the financial health of this company? How long can this company go until it runs out of money at its current revenues, right? If it's not profitable, and like what is it doing to get profitable? What is it gonna do to grow its revenue? And these are all fundamental things. These are huge fundamental questions to be asking yourself. And if you can say, yeah, the company's going to grow at a 7% revenue a year, and then its earnings per share is going to grow at 2%, and then it can start buying shares back. These are fundamental questions to ask yourself. After you got all these questions done, all these different things, then you can go to the technical side and kind of look at the charts, and you look at the volume, and you can look at the arrows and stuff and be like, like where are people buying and where are people selling? Where's the large volume? What's the trend? What is the trend on the 3-month? Like where is there more of an up? Is it more of a down? Like where's that line going? Right? And does that line match with your fundamental view? Is the market going up with it? Is it going flat because the market doesn't know what the company is doing? Or is it going down because the market truly doesn't believe what the company's doing? Those are all questions that you got to ask yourself. And like, for example, we can take this personally, like for Bitfarms. A stock that I love, but it has not performed like I want it to, right? You can look at the company like, oh, it's doing great, but the stock price is going down. Market must think it's going to do poorly, but I'm taking it as an opportunity. Like, yeah, people are selling it because they don't know what they're doing. That's like, that's the type of stuff that you got to think about. Why is the stock going up like crazy when like I don't see like any projects coming out, but the market's raging? These are things you got to think about. That's like very fundamental. When it comes to technical, like at the end of the day, you truly do not care about the company. Like when it comes to day trading, you like do not care. Like all you care about is that chart and the volume and the probability of what you're looking for is going to hit. That's all you want. The only time you want to get technical and fundamental with each other is when you're kind of looking for that entry point on an investment, but you're not looking to day trade that entry point. You're just kind of like trying to get that rough feel, like a rough estimate of like, okay, like somewhere in this range is like bound to be a good price. Mm-hmm. If you get what I'm trying to say there.
Yeah.
Yeah.
So in trading, there's always these kinds of trend graphs that show like, oh, if this was the past history, this is where the stock is most likely going. Right? There's different kind of graphs, correct?
Totally, yeah. They say his past performance doesn't predict future results, right? But you only have history to look back at too and see what it's going to do. But you can't, like I say, yesterday's price isn't today's price. And today's price isn't going to be tomorrow's price either. So you got to just take that into perspective. And that's why people have like set rules like stop losses or like take profit gains, is because they don't want, like when it gets to that moment or it hits, they don't want to like let their emotions run wild, right? And just be like, no, it's going to go up more. Or, no, it's going to go down more, right? They just cut it. And that's what you need in trading is discipline. That's the word. The special word we're looking for is discipline. And if you don't have it, you're not going to win. And that's like what I struggle to do at the most, right? It's like you get 10 wins in a row and then you feel like you're like the greatest trader on earth. And then you're like, okay, I'm going to do this little bit of a riskier trade, but it should pay off, right? And then it loses and then it kills your mojo, like it does, as I call it. And that's the type of stuff that people just cannot get past. They just can't. Like not everyone, but like most people that I see get into this sector.
Right. They let their emotions kind of drive their decisions, which is not the best.
Yes.
We haven't touched on this, but 85% of your portfolio is crypto sort of based in a sense. Not exactly crypto, but in that kind of sector. So I'm curious, what's your top favorite cryptos, if you can rank from 1 to 3, and maybe your projections and predictions for the next 5 years to 2030?
Like actual cryptocurrency is what?
Yeah.
Bitcoin. That's in the top 3. I don't believe I'm with Michael Saylor on this one. There is no second best or third best. There is Bitcoin and Bitcoin only. It has the structure, it has the fundamental values of what a cryptocurrency, or not even a cryptocurrency, what we can be closest to the perfect money or the perfect currency. That's what Bitcoin is. These other coins out there are copycats. They're projects that people have tried to copycat off of Bitcoin. And I'm not saying it's gonna all crash, but like I don't think there's any real value in any of these other cryptos. It doesn't mean It isn't going to go up. It's going to go down. There's memes, right? They're going to do their thing. But if you're looking at true value in the long term, it's Bitcoin. It is Bitcoin. The finite supply, the transfer, how you can transfer it to anyone in the world, the speed, the non-resistance of it. There's way too many positives and assets, even the security of it, right? Like, for example, if you want to store $100 billion worth of gold, you need a vault, you need security guards, you need mega amounts of assets to protect that asset, right? You're spending money to protect an asset. Bitcoin, you can't steal that. You can have $1 billion in Bitcoin on a flash drive and no one can get it. No one's going to be able to get that Bitcoin, you know? You just defeated hundreds of years worth of banking, financial institutions of main model is protecting wealth. And that's why you get so much hate, I think, is because some of the bigger players realize, wow, like this Bitcoin thing is so disruptive. Like this, if we let this get way too out of hand and fast, Bitcoin will surpass the federal system. Like if everyone were to say, screw it, let's just all buy Bitcoin and let's just use it as a currency from now on, you would bankrupt pretty much every single bank and credit service, credit cards out there instantly. Like that's what they see, and that's why you see all these ETFs, you see MasterCard, you see all these credit services trying to get into the space because they know this is a space they can't miss out on. It's like Blockbuster when movies went digital. It's like, oh no, we're gonna stay DVDs. No, like you're gonna get killed. You will lose all your business, like if you don't adapt. And that's like a huge thing with investing is adaptation, adapting to your environment.
Yeah. I see Google came out with a quantum chip that can do ungodly amount of calculations in a single second. And I wanted to ask you this. This may be a big fear for the security of Bitcoin because to obtain a Bitcoin or a certain amount of it, you have to solve this tedious calculation that takes computers hours and hours of time. But with a quantum chip and maybe even 400 qubits, you could maybe solve that equation in a matter of minutes. So how do you see that changing the landscape of the whole? I'm going to see technology is moving so fast and so many different sectors are coming up at this time. It's an amazing time to be alive. But
well, totally right. Like now we're getting into subjects where I'm very really don't know much information about the quantum computing stuff. But yes, that is obviously one of the rumors right now in the crypto space is, the quantum, the speed, it can defeat crypto. I just think that's noise. I truly think that's noise. There's Bitcoin has a very, very strong network. It very hard. I think anything's breakable, but I think Bitcoin is very, very strong. I don't think a single entity can hack it. I don't even know how you can hack it. This is coming from a person who doesn't know much about computers, but I don't see something like this can be hacked. I don't even know what a hack would look like. What, just it going to zero? What would make it go to zero, right? It's a bunch of buyers and sellers. And crypto trades on thousands of different marketplaces, right? So it's what are they going to do? Hack one marketplace? Well, there's thousands of other marketplaces, right? That trade it.
Yeah. Yeah, I don't know.
I guess like when you like cracking, like that's a really interesting one, like cracking the actual network, because what is like you now you're talking about like cracking the blockchain, and it's like this is stuff that's so far out of my head, because like I invest in crypto miners, for example, not just because of cryptocurrency, but for the data center side. But I don't see it. Like, I don't see it getting, like, for example, I'm trying to say, like, there's fraud in the money system that we have today in US dollars. You can go print, or Canadian dollars, you can go print a fake bill. And if someone accepts it, they accept it, right? What is the difference of that between Bitcoin perhaps getting hacked and a person, multiplying the amount of Bitcoin, for example, like creating like fake Bitcoins? You know where I'm trying to get to? This is a really touchy subject, possible, right? Like, I don't think it's possible.
No, that's not possible.
To create a fake Bitcoin, or like, that's where I think I'm trying to get to, is like, how is it even possible to do that? Like,
well, it would be for someone with the quantum's just coming up, right?
Right.
Q4 of 2024, we had breakthrough kind of discoveries into we can actually have a quantum chip with thousands of qubits and can have insane amount of calculations per second kind of rep. But what would they do? Like, what would that look like? What I'm thinking of is possibly in a couple of years, when quantum really gets to the mature stages of itself, someone could attack a wallet with lots of Bitcoin, and just there's a very hard equation in the way. But if you have kind of bits, I'm not sure if you have familiar quantum. So a qubit is a singular bit. So computers run on bits, right? There's bits with zeros and ones. But a qubit can be anything between a 0 and a 1. Infinite combinations between that. And 40 of them, it would be 2 to the power of 40 calculations per second. So it's absolutely bananas. But if they attacked a wallet, they could solve that equation within minutes. And all the Bitcoin would be stripped out of it. And they could do that many times because, you know, it's a bad actor. I don't know. I don't know what goes in their mind, but the possibility arises, and it's a true threat, in my opinion, that I see it. But, you know, we'll see how it unfolds.
Like I say, I've been in the market for a long time. I've seen many sectors, not just Bitcoin. They come with their rumors and they fade, right? And that's how even though I don't, like, I fully admit, I don't understand the blockchain. I don't understand that quantum computing stuff, that code, that network stuff fully. But that is something that I guess you can just take as a risk. I guess, like, for example, I guess you can take that as a risk when you come to investing in crypto. But I really don't think that's something that you should worry about, is because if it was going to be hacked, it would have been hacked now. Or, like, I don't think, for example, or a computer that goes so fast, like, I don't think you can do it. Like, it's just, even though the computer's fast, it doesn't mean it's going to crack the code. Or, like, what I'm trying to say is, like, it can try and crack the code faster, but it's still not going to crack it, is what I'm trying to say. Another one is what I was thinking is, like, Bitcoin mining, is like quantum computers mining Bitcoin, because can it mine faster? Can it go into the network, right? Can these computers take over, like, miners and then kick these miners in the butt, right? But that's something I don't see happening. Like, Bitcoin mining is a very weird, it's very power intrusive. It takes a lot of electricity. That's not really along the lines of this hacking subject, but, like, if you were to want to destroy Bitcoin, for example, like, if you wanted to hack it to destroy it, I wouldn't be looking to hack it in a programmable way. I'd be wanting to destroy the energy infrastructure around it. So, like, electricity feeding miners, infrastructure for miners, that type of stuff. But I don't think you can destroy Bitcoin. That's, I think, another very, very possible, like, positive thing, for Bitcoin is you cannot destroy it. It's here forever. It's been created, and now you cannot destroy it. Unless if the internet goes. Well, if the internet goes, the internet goes.
Everything goes with it.
Yeah. I guess that's the boogeyman in the room. But
no, all I'm saying is that you do your research, right? I tend to have recurring guests every 2 years. So you have some research in the quantum realm. I personally feel that in the next 10 years, the quantum realm will be the biggest subject and we'll be all talking about in a few years. And it's in its very baby stages, like AI was when ChatGPT first came. Everyone was like, oh yeah, it's whatever. Look at the spaghetti that Will Smith is eating and it's all wiggly and whatever. But I think quantum computing is there. And yeah, I don't know. We'll have to see. No one knows what'll happen, but
well, these are all things that have been created like 5-10 years ago, right? It's not like when they came out with AI, it was like, oh, look at what we came out with. It's like we've been working on this for the last 10 years and we finally got it to this stage type thing, right? Yeah. And it's like quantum computing. I think of it the same thing as like, oh, look at what we've done. But like, yeah, we've been working on this for the last like 10 years. So I take that. And I also take that with all my investments. Like, I think of that too. But I don't think quantum computing in the near term is going to be this revolutionary thing. Like, not everyone is going to go and buy a quantum computer. I don't even think there's a need for that type of stuff.
Bro,
I don't think... Like, I think even the CEO of NVIDIA even said... There is no use, like in today, right now, there's no use for quantum computing. It's too powerful. It's way too much energy. It's, there's nothing that needs that much power yet. There's definitely a use, but it's like, we're way too ahead of ourselves is what it's kind of feeling. And that's like, what a market bubble is, right? You see all these stocks popping in the quantum space and they're going off like crazy. And it's kind of like, you know, we just started and you're all popping off like we hit the champagne and we won. But it's like, okay, like bubble alert perhaps. But I never want to come out in the public and say bubble or bull run. I just like to say my own thing because I can be wrong. Like we can wake up tomorrow morning and quantum computing could be like the thing, or we can wake up tomorrow and crypto mining can be like non-existent, right? That's like a risk you have to accept in the stock market with any financial asset. You have to just accept the risk that this can be non-existent tomorrow for whatever reason possible. And that's, I think, can answer your question with the hacking of cryptocurrency is like, you just got to accept the fate. You just got to accept some fates. And it might sound stupid. And honestly, I think it is a little bit stupid, but at the same time, it's just, it relaxes you. It can just relax you as an investor, relax you as a trader, make you think more clearly.
Yeah. The weight is kind of off the shoulder because you know the worst case scenario is that you just lose. And if you accept that, then all the gain seems like a bonus. It's
like when I invest in these oil companies, it's like, for example, I invest in a smaller oil company that only has like a couple production sites. For example, what if the largest production site blows up and they lose like a whole bunch of assets, people die, whole bunch of liabilities come on? It's the same thing. The company just went belly under because a horrible, tragic circumstance happened and it wasn't able to recover. And it would be the same thing for crypto or the same thing for any other investment.
Okay, so we're going to get into some structured questions.
Let's do it.
How will the U.S. election now impact your business/life? I know they're coming in office in a couple days.
On the 20th.
Yes.
20th is the big day.
11 more days. And then how would you feel the stock market will... kind of move. I feel like the episode will come out after that, so this is a true prediction, and we'll see if you're.
I think we're honestly priced in. I really do think that we've priced in the Republican change already. I think the Trump pump, as what like many of us like to call it, has faded. Same thing with the crypto thing. I think it's kind of already priced in. I don't think there's going to be too much of a rise. There might be like an intraday, like, 3-4% climb, but I'm not talking about some massive sediment changing stuff. I think the sediment is already priced in. For me and the business with the US election, it does not affect me much. I'm really lucky they don't tariff anything when it comes to investing in the stock market. For example, it would be the worst decision for any country on planet Earth to tariff other people to invest in their own stock market, because everyone would leave right away and you would have no investment in your economy. So being in the role of business that we're in, we're very fortunate to be able to buy these assets and buy these quote unquote future income producing things that are not going to be taxed or tariffed like any other solid product would, right? So that, but I guess you can say the Trump election would affect like my long-term holdings, since he's a pro crypto president. That's going to hopefully or should help crypto in the long term here. And if they were, for example, my theory here is they're going to replace the Security Exchange chairman, they're going to change out the Federal Reserve, and they're going to put in a whole bunch of crypto pro people, and they're going to really change things.
They're going to change the Federal Reserve?
I think there's going to be a new chairman very soon. I think Jerome Powell will be swapped out. I think he will be getting kicked out of his chair. I don't think President Trump is very happy with what he has allowed to happen in the last few years.
Let's leave it at that.
I just ended on that, but hey, I'm not Trump. I'm not. It's not even the country that I reside in. It's just what I see. It's just my own opinion.
Observations.
Exactly, and that's what makes a stock market, right? Is everyone's different observation and opinion.
Yeah, you said that earlier. That was a beautiful sentence. I've never thought of that. And that kind of paints the whole picture, which is fascinating, truly. What do you think about Elon Musk? I don't know if you invest in his companies or his Dogecoin kind of crypto. How do you feel about all that?
Smart guy. He's volatile. He's a volatile man, as I like to call him. He's all over the map. I don't know him, but obviously I like what he does. I think he has good intentions. He is obviously a very, very smart dude and knows the way of finances. He knows business. He knows how to manage people. You don't run multiple companies that are all technology breaking companies and outpace all the markets that they're in by a substantial amount by being like a relaxed person. Like, he has to be a very intense, thoughtful guy, like that is hands-on all the time. He is not that type of CEO that's sitting in his lounge chair chilling. He is hands on the ground, looking at the operations, doing the work. And that's why I think the success comes from that guy. That's why Tesla stock has done so well. That's why he's able to raise funds so sporadically fast, is because his vision and his oomph for drive is so much greater than anyone else. It's bigger than me, I have to admit it. Like, I'm nowhere even like, I am light years away, universes away from that guy. And like, I can just see, like, this is why he's so successful. This is why he does what he does, is because he's got this drive. He's got this oomph in him, and it just shows. Have I ever touched his stock? No, which is honestly maybe one of the biggest regrets ever. I have people who I know that
Wow.
have touched their stock and have made great money off of it. But like Warren Buffett says, you can have 100 pitches come down the lane and you don't have to swing a single time, because if you miss once, then that can be your final swing. You can be struck out. You just got to know when you swing, and if you buy or sell, or when you make that position, you're going to hit the ball. That's what counts. And like, Tesla, I was just graduating high school and I was just trying to learn the market when that stock really started to take off. So I don't really look at it as a missed out opportunity. I just look at it as like a crazy growth story. We can get into a real big conversation about missing stocks here and there, but like I think the Tesla company and Elon Musk is just like a dictionary like description of like success and business drive and like just future, like I don't even know how to describe it. The guy's crazy. He is literally insane. Like he is a different animal when it comes to being a CEO in a business. And I think that's like you can take it in a positive and a negative when it comes to investing in the stock, because you don't know what's going to happen next, right?
That is true.
You don't know.
Yeah, I just finished reading his book, and there's these instances that he would tweet some like absurd stuff about taking Tesla private or stuff like that would just break or make stocks. And yeah, you're right, exactly. You never know.
Exactly. Like to get into a personal look, like when he gets into like Dogecoin and he talks about these certain things, I truly think there is some type of motive like in the background, but like I'm not gonna go any farther than that in saying why he wants to say that stuff. But hey, he can do what he wants to do, right?
Yeah, I mean,
he's a smart guy. He's way smarter than me.
Yeah, bro, same. Yeah, he hit 400 billion a couple weeks ago, which is who's the first human in the world to reach that kind of net worth, and it's just beyond light years. Universe is beyond us.
Pump the stock.
Yeah. What challenges you?
Myself. Genuinely myself. I challenge myself every day. I find myself being the biggest roadblock in front of most successes. Find like when I get to the other side, most of the time I'm like, if you just did this and this, you would have been here so much faster. Or if you just like did this more and listened, you would have been here. But like, I guess that's the life journey, right? That's how I look at things. But there's definitely certain episodes where it's like, you could have learned from the person telling you that, or like from watching a different person's scenario. I've had different life experiences like that. But truly, myself. When it comes to everything, it's me, myself, and I. When it comes to challenges.
That's a good song.
Yes, it is a good song. There's a couple people who have a song called Me, Myself, and I, so I don't know if we're thinking about the same person.
Oh, yeah, probably. Yeah, greatest challenge. I think same. What motivates you?
Well, outside of making my family happy, making them proud, my girlfriend proud, definitely making Pacific Cove Holdings what I want it to be one day. And that's Western Canada's biggest venture fund. Not like,
wow.
Yeah, that's what I think. I really do think Pacific Cove Holdings, if the cards were to fall right and the chips were to go right, it's a lot to ask for. And most hedge funds like this that start like this go bankrupt and don't make it. But with the vision that I got and how it's going to be, I really do think we'll have one of the biggest, if not the biggest, portfolio in Western Canada that holds small cap volatile stocks, and hold a portfolio of companies that is based off of that. That's the goal. That is the goal. That's the bread and the gravy right there for Pacifico Holdings. But until we meet that, right? It's just a long, tedious grind of buying and holding your assets. It's like day trading gets you so far, and especially me not being the greatest day trader myself, like you gotta realize like your percentages. Like there's two ways of winning in day trading. You either have a greater than 50% win rate and you trade on the exact same risk. So like, for example, you trade $10,000 trades, only do $10,000 trades. And if you win 51% or more, you're going to be profitable. Or you make trades, they're sporadic, but your winners are much bigger than your losers, which is a lot easier to say than make done. But like that's the one of only two ways to be profitable. And I've come to myself that, you know, I'm a much more profitable investor than I am profitable trader. I can make money trading, but like that's not where the value would be in the long term. The value would be for me is to just build portfolios for other people that have a long time frame and are not looking for that day trade. They're not looking for a 20% dip or rip, or they're not like studying the stock market every day and they're getting agitated for those little price movements. We're here for the long term. Like I said, I've watched the stock go from face value of where I bought down to zero, and I've watched it go from where I bought it to the sky. And to be honest, like both ways, either way, there's no different when you hit that closing trade button, right? There's no difference. There's no sound, there's no reward, there's no nothing. So it's all mental.
And lastly, what do you think is the meaning of life?
To pursue what you want to do. I truly think, like, I think there's really no meaning. I think we're here for whatever reason, but if this was a question to like, what is the meaning of life? What meaning to make you happy? It is like, what makes you wake up that day and what makes you want to do something that day. That is your drive, that internal drive. And everyone's eternal drive is different. You have people who will just whose internal drive is just sit around, do nothing, and that's great. And then you have eternal drives like Elon Musk, which is like, it seems like he can never find his limit. It just keeps going and going. Like he's got to keep pushing it, be more and more and more. So I think the meaning of life is just as big as how much your drive is. If you have a small drive, then you small meaning of life. If you have a big drive, then you have. That's a question that I've been asked before, and I had a total different answer. Obvious, I'm not going to be able to repeat the answer from last time. I just remember it's very different, but today that's what I think.
Mike, it was fantastic speaking to you.
Sadra, it's amazing seeing you every time. I haven't seen you since like we were kids, maybe. Probably, honestly. But
yeah,
seeing us grown up now, it's awesome.
And thank you for spending time here, and I wish you all the best in the endeavors.
Thank you, Sadra. Thank you for everyone listening to my rambling, because I know myself I'm not a great public speaker and being able to keep a topic on forever, but I really hope what I said, you're able to pick out some useful information and use it for your own personal well-being.
Amazing. Thank you guys for watching. We'll see you next time.